Ahoy there, traders, and welcome, officially welcome. We've had a little bit of a preamble before we got going officially, but nonetheless, welcome one, welcome all. Nice to see the early attendees, as I mentioned a moment ago. We've got Adrian in, Alan, Bonnie, hello Bonnie, Craig, Duncan, Glenn, one or two others. Let me just scroll down the list. Who else we got? We've got Kyle, we've got Vito. Again, just skipping down the list just to say hello. So hello. We are going to be looking at 6 of the best this week. I want to get into the educational elements of what we're doing this week quite quick and quite early on, and then flip it over to looking at the markets, because they're kind of interrelated. What am I looking for when I'm looking at the charts? And I'm really looking for one of 6 things, hence the name 6 of the best. And nonetheless, the usual formats of the week, these types of sessions goes something along the lines of, we're going to talk about the markets for 20-30 minutes. It's an educational bit. They're going to fuse together again this week. And usually the session lasts up to about 60 minutes. We're going to look at the markets, going to review the portfolio. We've had several trades since we last met up. And again, we're going to start off this week pretty much by looking at 6 of the best. What am I looking at? What are the 6 main components of the visual step of what we're doing in this production line? Again, just to remind ourselves of the production line, I'm looking for a mechanical reason to look at a chart or an opportunity. And then we're going to spend some time this week looking at step number 2, which is like visual confirmation. What are we looking for? So that's going to be the 6 of the best, one of those 6 things that we're looking at. Nonetheless, if you've got any questions, comments, observations through this session, let me know. Yeah, Glenn's got a comment. Yeah, what a week. We've had an awesome week trading. So we'll look at that in a moment. But nonetheless, if this is your first time this week, or you've not seen me before, I'm not a Wall Street guru. I'm just someone who's been doing this a while. I managed to figure it out. I've been hand drawing charts since the early 90s. I did it the hard way, the trial and error way. But nonetheless, that's where I ended up with. I didn't know that there was other people that would help me along my journey, my path. That's one of the reasons why I like to do this. I never had anyone to ask when I started out. So just to be that sounding board to help you along your journey is why I like doing these sessions. I'm just a regular guy, as I like to say. I'm what most people might call a lifestyle trader. That doesn't mean that I sit on a beach and sip pina coladas all day. It's my lifestyle. I get to choose whatever I want to do. I like to drink coffee, read books, have a nice leisurely pace of life, and just enjoy myself, and try and keep stress-free. So whatever your idea of a lifestyle is, that's your choice. But, this is mine. It usually involves cake, maybe ice cream. But that's just what I like to do. Quick backstory is trading full-time since 2001, hand-drawing charts since the early 90s. Pretty much call most of my trades out in real time. Some of them are just not impractical to call. That's why I say most, just because I'm focusing a bit more on day trading at the moment, just because the markets are absolutely awesome at the moment. And it's just impossible to do it unless you're in one of our live sessions. So I've been doing that a while, pretty much like helping you traders become better traders, consistent traders. I am the type of person that just stops tourists to see if they need directions again. And we often get asked, like, why do we do this? Why do we teach people? I enjoy doing it. I can't explain it. It's one of those things that I like doing. I really get a buzz out of helping other people see the same type of success that I do, either in these small free sessions or in a more official capacity where I'm explaining exactly step by step my production line trading process. If you're trying to replicate that for yourself. Anyway, as I alluded to a moment ago, we've had a great week, and we've had some absolutely fantastic trade out there last week's week before. There we go. So we've had some great trades. Again, it's not just me. I usually like to try and highlight student successes rather than just say, hey, look at me, look at my broke statements. Look, I'm amazing. I hate playing that game, but at the same time, it's a fine line between demonstrating like I'm really doing it. Here's my statements versus my students get results and they're able to replicate what we do. So that's what I'm trying to highlight here. It's a simple, consistent process that we follow every day. It doesn't matter whether we're on a 5-minute chart, a 2-minute chart, a daily chart. We've illustrated this many times before. If you don't have the time to day trade, that's okay. Like, look at the daily chart. The same setups happen all the time. So choose the one that's appropriate for you. And the best way of thinking about these things is like, what time do I have to trade? If you've not got time to day trade, don't worry about it. As I said before, like, don't worry about it. Like, think about the end result. Like, if you've got the time to look at things at the end of the day, then you're probably not going to look at an intraday chart, whether it's a 5, a 60 or anything else. If you've only got time to check in at the end of the day or the beginning of the day, then probably swing trading. It's probably going to be swing trading, get paid at the end of the month is how I refer to this sometimes. And, that's the best way to think about it. If you've got a little bit of extra time in the day, then maybe you want to step down to a 60-minute chart. All the same setups and patterns happen there. And if you've got a little bit of extra time to spend 60 to 90 minutes around about the market open, which some of you have, you're obviously here, you've got a little bit of extra flexibility, then maybe you've got the time to do some of these trades. And that's what these trades are. These are all the kind of off the 5-minute charts. Some of them are based off the 15, so just for some overnight swing trading. So we've got some really good trade setup. So again, I'm just flicking through again, just highlighting the student successes. Which is absolutely awesome. This is my personal trade. Again, started off as a day trade, turned it into a swing trade. We're going to touch on how we find these types of trades today. So this is kind of the leading into the, like, how do we get these trades? How do we find them? How do we look for opportunities? We look at these things every week. But what we're going to spend a bit more time on is like, why this chart versus that chart? Why this stock versus that stock? What makes this stock a better candidate today compared to something else? Why Apple yesterday and the day before and not last week? Because again, it's the first time we've traded Apple this year actually. But why not trade it at any other time? So we're going to look at that as part of what we're doing with our educational piece, which might be a nice little segue into, let's go and talk about the thing that we want to talk about. I want to start off here, 6 of the best. What does that mean? For me, I've intentionally got a blank screen here because I'm going to do a little bit of drawing and then we'll move over to the charts. So 6 of the best, what does that mean? I'm looking for 6 flavors of charts, if you like, 6 possible ways that the chart is developing or unfolding. So before we actually find a chart to trade, we want to evaluate, like, what's this trade doing? For whatever reason that we're looking at a chart, and we've been through many scans, pretty much every week we go through different types of scans. But what I want to focus on is, like, now we're looking at this chart, what am I looking for? I'm looking for, like, number 1, price trending upwards. That's number 1. Really simple. Number 2 is I'm looking for price trending downwards. Again, that's it. That's what I'm looking for. Either up, down, and then number 3, you guessed it, sideways. It's either going sideways. Now, what we need to do, and it's number 3 that people kind of get stuck on. Usually number 1, number 2, it's either going up, it's either going down. And in case you weren't aware, for some of the newer traders, I see there's a few new names. If you weren't aware, we can profit from a downward movement in the stock price. It's something that I take for granted. I've known it since very early on. I don't remember a time where I didn't not know that we could profit from downward movements in the stocks. But for some people, it's a revelation. You're like, really? You can do that? Yeah, you can. So maybe it's a statement of the obvious for some people. It just surprises me that people don't know it. It's something that I've always taken for granted. Anyway, number three is what people get stuck on. Prices in a range. Now, it could be that price is oscillating. It's not trending up. It's not trending sideways. So when we talk about ranges, we're looking for price in a very sideways, oscillating back and forth. Now, interestingly, if this was on a daily chart and you drop down to, say, a 60-minute chart, you'd actually see number 1 and 2, you would see the trending up and trending down on lower timeframes. So this is also something that can kind of catch people out, especially newer traders, is this top-down analysis, this multi-time frame approach. So one of the things that I like to teach initially, and for most of the last 15, 20 years, I've typically just one time framed it. Pick a time frame. One time frame is all we really need. And when you get used to the process, you can start doing multi-time frame analysis. It's going to add an extra dimension, but having say a daily range and then evaluating a 60-minute trend, they're always going to be in conflict, and that can trip the newer trader up. So make it easy for yourself. Just start off with a time horizon. So not only do we want to do this, like, what is the trend? It's either going up, down, sideways. Again, up, down, or sideways. It's doing one of three things. But Phil, you said there's six. There is six, but we need to recognize this. Up, down, sideways. You've not got onto the six, the best part. We're just identifying what's this chart doing. But then add on time in the time horizon, specificity, get focused in the last 3 months, in the last 6 months, in the last 12 months, on a daily chart, or if you're on a different time frame, in the last 250 bars, in the last 50 bars, in the last week on a 60-minute chart. Be specific, put a time horizon on. Oh, in the last 2 weeks, in the last month, in the whatever it is, in the last insert time period, the chart is going up, or the chart is going down, or the chart is going sideways. So when we have specificity, it means that we can start to replicate it. It means we can start looking for that opportunity. So now that we're thinking about is it going up, down, or sideways, we can start thinking about planning a trade. So before I kind of move on to the six of the best elements, does everyone get this? This is really simplistic. And again, don't confuse a lack of complexity with, oh, of course, Phil, we know this. I've been doing this over 20 years. I've been coaching people for most of those 20 years as well. Like, most new traders, most experienced traders who are not successful, they're not consistently making money, they don't do this. They typically don't do this at any level. What's the trend? If you're not doing this, you're probably not making money. You could quite literally add this to whatever you're trying to do for trade selection and suddenly become a very, very much better trader. It's very surprising how many traders who are not yet seeing any type of success that don't do this. And as soon as they apply what's the trend, it's going up, down, or sideways, then they suddenly become profitable. Like, maybe they go from losing consistently to break even, or they go from break even to profitable. It's just night and day when you just add something so simple. So again, don't confuse a lack of complexity with, oh, of course it doesn't work. It works. It's such a simple concept, and it really surprising. So anyway, six of the best. What are we going to do when we can recognize, and we'll go into the chart examples in a moment, so just bear with me. I see the comments. When we can recognize what the trend is, it's going up. Great. Now I know what the trend is, and not just what the trend is, but in the last, let's just say 3 months. So on a daily chart, it might be 3 months. On a 60-minute chart, you might be saying 3 weeks. On a 5-minute chart, you might be saying 3 days. You get the idea. It's fine. 3 months. Pick a time frame, pick a time horizon. In the last 3 months, the chart is going up. Great. Now I know what the trend is. Now I know what the trend is. This is important because this is money flow. These are the only reason why there is an uptrend is the institutional traders, not retail, not you and me. We do not move the markets. The institutional traders are valuing the stock at ever increasing higher prices. I'm prepared to pay a higher price today than I was yesterday. And I'm prepared to do that in large quantities of money. I'm prepared to do that. Again, it's institutional money that's driving prices higher. Great. Now I know that. Now I know that there's a trend. Now I know what the flavor of this chart is. Any downward movement is an opportunity to buy the dip in an uptrend, because now I know what the trend is in the last 3 months. There's a good chance that that will continue because that's the money flow. Any downward movement is an opportunity to buy the dip. And that's what it means. Again, I know I'm being really simplistic, but we don't need to complicate this. Any downward movement is a buying opportunity. And a good trending strategy will help you figure out, okay, when's the best time to start actually buying the dip? We can buy support in the context of an uptrend. We can use Fibonacci retracement, we can use Bollinger Bands, we can use moving averages to help with these things, these benchmarks. Again, the purpose of this is not to help you with timing a trade entry. We speak about that pretty much every week. This is just like, now I know what the trend is. I'm going to be a buyer. I'm going to be bullish. I've got a directional bias because in the last 3 months, in the last 6 months, in the last 12 months, the chart's going up. That's probably going to continue for at least the next few days. Great. I'm only going to be bullish. It gives me the maximum opportunity. And conversely, the second thing of our 6 of the best, the second thing is to, guess what? Sell the rally. So when we've got a downtrend, again, let's just, the time horizon doesn't matter, but we need a time horizon. We might be looking at, oh, there's a very clear and obvious trend in the last 12 months. Great. Now I know that. Guess what? Any rally is an opportunity to sell the rally in a downtrend. Any rally is an opportunity to sell the rally in a downtrend. That's what we're looking for. Again, lots of ways to doing this. Again, purpose is not to help you with timing. We've spoken about that many times in other areas, in other workshops. It's just like, recognize what's going on. Great. Now I know the market's trending. I can use trending tools. I can use moving averages. I can use Bollinger Bands. I can use Elliott Wave. I can use Dow theory, GAN theory, MACD, RA. I can use all these tools, but I've got context for how I'm going to use the tools. So let me pause there before I go on to the other 4, because it's the other 4 that most people, like, I'm not sure about the other. These are the easy 2. Anyone that's been doing this for more than a day, whether it's 1 day, 1 year, 10 years, it's easy for anyone to see, hey, this chart's going up. Great, buy the dip. This chart's going down. Great, sell the rally. Easy peasy. But does this make sense? You do this before you think about placing a trade. You're going to have a better trade. You're going to give yourself an edge, an advantage. And what we want to do as traders, as part of the strategy, this is the second thing that I do. This is not even the first thing that I do to choose an opportunity. We go through what to look at, and we have done in previous workshops. When I'm looking at the chart, this is what I'm looking for. Is it going up, down? And we'll come on to sideways in a moment. But does these first 2 steps, this make sense? Just give me a little yes in the chat box. Yes, Phil, we get it. You've banged that drum. Again, don't confuse lack of complexity or how simple this is for, it's too simple, it won't work. It's not complex enough, it won't work, because that's the usual argument for not doing this. And again, I know that like some of like the students that I have that are in our session today, like, yeah, we know that I bang this drum. Do this. If you do nothing else other than figure out what the trend is, and I drop dead tomorrow, like, just know that if you apply this before you make any trading decisions or any investing decisions, you're going to have better opportunities. Perfect. Thank you very much for your feedback, folks. Really, yeah, it's absolutely done. Yeah, it's simple, but it's essential. It boggles my mind. Again, just to come back to an earlier comment, it boggles my mind after doing this for 20 years and teaching people for the similar length of time. The ones the people who are not seeing any measure of success, they're not doing this, and it's very consistent. And the ones that they're seeing some success, some maybe mixed results, they're doing some form of this. I was speaking to a gentleman earlier today. He's been looking at the markets since, like most people, since the pandemic started, sort of this time last year, they started looking at the markets. And by a happy accident, he's doing this. It's like, oh, the chart's going up. I'm going to be a buyer. Now, he's not got the timing part perfected. Didn't know to buy the dip in an uptrend, but he was recognizing, hey, it's in an uptrend. Great. I'm going to be a buyer. It's going up. I'm going to be a buyer. And just by a happy accident, that's what he was doing. And he was smart enough to recognize, like, I don't know why I'm making money. I don't know enough to like make it better. And that's why we were talking. But he knew enough to make it work. It's in an uptrend. Right, buy. It's probably going to carry on going up. And he knew that, like, he was doing something right, and he was waiting for it to go wrong. And I said, no, just keep doing that. If we don't do any work together, just keep doing that. It's not perfected, it's not polished, it's not refined, But if you do nothing else, if it's going up, it's probably going to carry on going up. A trend is a trend is a trend. Sorry, I'm kind of laughing here, but it's hopefully you get the sentiment of what we're trying to achieve. Anyway, so we've got number one, it's going up, and number two, it's going down. So this brings us on to 3, 4, 5, and 6. Again, 6 are the best. I promised you 6 are the best. So the number 3 is it's going sideways. So the last 4 or the next 4 things that we can look at is when we recognize that price is in a range. Price is consolidating. And again, we want to define that time horizon. Again, it could be 3 months. It could be 6 months. It could be 2 days. You could be looking at a 5-minute chart. Make sure that you're defining the time horizon. In the last X time period, it's in a trend. It's in a range. Now, that defining the time period, again, is the same whether we're on any time frame. 5-minute chart, 60-minute chart, daily chart, weekly chart, monthly charts, yearly charts, whatever. Same thing, define time horizon. It'll be more relevant when you've got experience, when you are ready to maybe look at multiple time frames, and you can start trying to kind of piece the puzzle together across different time horizons. And you'll be able to start saying, okay, well, in the last 6 months on the daily charts, it's in a range, but in the last 6 days on a 60-minute chart, it's in an uptrend. Great. It's in an uptrend at resistance on the daily. You'll be able to start layering things on. It's not something that you need to worry about on day one, but when you start to define the time horizon, it will make it easy to transition into multiple time frame analysis. When you've got confidence, when you've got clarity, when you've got experience, don't worry about it on day one. Just like define the time horizon and get into that habit, get into that routine. So the next 4 things that we can look at, the next 4 things, and again, this is usually what where most traders kind of fall down. Recognize that price is in a range. And then we've got 2 choices. What we want to do next is basically start asking ourselves, where's price in the context of the range? Is it inside the range? Is it above the range? Or is it below the range? So there are 3 areas. Now, what we want as traders, we want the highest opportunity and the lowest risk. So for the first thing, so number 4 is to buy range lows. Buy range lows. So that gives me the lowest risk, because if it goes below the range, then my trade idea is wrong, and that's okay. We've got minimal risk, and my opportunity is to the range high. So I can trade it from the range low to the range high. Great. And why is that true? Because if price is in a range, nothing new is happening. So that new would be a price outside the range. So if nothing new is happening, the same thing's probably going to continue. So as price travels down to the range low, we would look for our usual entry pattern. Again, purpose is not to tell you an entry pattern today. We've been through them many times in the past. But if it looks like it's stalling, it's stopping, it's slowing down, there's a good chance that until something new happens, a breakout, till that happens, then the same thing's going to continue. It's probably going to move higher. We've just seen this on Netflix, NFLX. We're going to look at that in a moment. But we've just seen this on Netflix. It went from the range low to the range high. And now we're looking at number 5, a breakout. So if prices say above the range, we can look for that rally out of the range. We can wait for a pullback, a correction. And again, it needs to stay above the range. We can start buying a breakout. So number 4 is a range reversal. Number 5 is a breakout of the range high. So buy range lows, buy the break of range highs. Is everyone happy with that? Buy range reversal, bullish at range lows, reversal off the range low, breakout of the range high. And you may be surprised to know, I don't know if you will be, but sorry, I've got the numbers wrong. Number 3, you've got number 3, number 4. Okay, numbers don't really matter, but there we go. But you will be surprised. Number 5 is just the opposite. Reversal off the range high. And your target is the range low. Reversal off the range high. Target is the range low. And then if price is below the range, then we can start looking for that breakout on the bearish side. Breakout, wait for the pullback, trade the pullback, the break of the low, and that would be number 6. So we've got uptrend, downtrend, range, and again, number 1, number 2, and direction number 3 has got 4 things. There's 4 things that we're going to do. Buy range lows, buy the break of range highs, sell range highs, sell the break of range lows. There's it. That's it. That's our 4, 5, and 6. So 6 are the best. Is everyone happy with that? That's the theory. That's the logic. That's the what we're expecting to see. So when I'm looking at a chart, for whatever reason we're looking at the chart, it could be we've scanned. It could be that we heard an advert on the radio. You might hear a McDonald's advert. You might see a Netflix advert. Whatever your reasoning for looking at the chart, it's fine. Mechanical reason to look at the chart. Again, we've been through technical analysis scans, a mechanical reason to look at the chart. When we look at the chart, we're looking for one of these 6 things. It's going up, down, sideways. If it's going up, buy the dip. If it's going down, sell the rally. If it's in a range, we've got 4 things. Buy range lows, buy the break of range highs. Sell range highs, sell the break of range lows. And there are 6 of the best that we're looking for. So when we look at a chart, that's what we're looking for. Number 7, I've got to round it off, got to mention it. Number 7, there's actually 8. I like to do 6 of them, but just to make sure that we round this conversation off, if we're in an uptrend, number 7 is I can sell the rally in a downtrend, which is counter trend. So I can sell the rally in a downtrend. I don't like doing counter trend trading. It's not in my personality, but nonetheless, that would be number 7. And obviously number 8 is if we're in a downtrend, we can buy the sell-off. I don't know, there's a fancy phrase of saying it, but we can buy the sell-off in a downtrend. Again, that would be counter trend. It's not what I like doing, but there are 2 other things. Again, I would be remiss if I didn't mention them. There's nothing wrong with them. I just don't like doing them. I want to make it easy for myself. I'm going to go with the money flow. I don't want to catch a falling knife. I don't want to step in front of a bus. I want to make it easy for myself. I want to go with the money flow. So that's what I want to do. That's the theory of 6 of the best. Does that make sense? We're going to go and put that into practice right now. But before we do, does that make sense? Any questions? Nice and simplistic. Again, I want to reinforce the lack of complexity. Don't confuse a lack of complexity with the fact that it doesn't work. I've in the last 20 years, I've developed and created all sorts of algorithms, strategies. I briefly did some work for a PhD mathematician to create black box software. I know what complex algorithms look like, and this kicks ass of complexity every time. Every time it kicks ass. So with that said, let's go and look at the charts. Great. It looks like everyone's in agreement. Netflix is our example. It was the last chart I was looking at, but we've got a good example. Can everyone see price is range bound? It has been for months. So guess what? Since July, in the last 6 months, price is range bound. And everyone see that. Doesn't matter whether this is your first day. Doesn't matter whether I've been doing this 20 years or you've been doing this 20 minutes. I'm sure everyone's in agreement that Netflix right now is and has been in a range. That's a fact. That's not going to change anytime soon. It's in a range. Perfect. Great. So let's do what we just said. Where's price right now, right this second, in relation to the range? Is it in the range? Is it above the range or below the range? Is it at one of our 4 preferred locations? It's above it. Perfect. Thanks for playing along, folks. I appreciate the feedback. Thanks for playing along. Yeah, it is above the range. Great. Trade the next pullback. It's just developed. So you can go from the range low to the range high. It did it on news, on earnings, huge gap. Now we're above the range. Trade the pullback. That's what it looks like. Buy the dip in a new uptrend. Cool.
Easy peasy. Should we go and look at another one? Let's just look at the FANG stocks for a moment. Let's go look to Apple. Over to you, guys and girls. What is, now we're looking at Apple. Again, all we're going to do is look at FANG stocks. Our mechanical reason for looking at the chart is it's on Phil's watch list over here on the left. We've done scans. We've scanned the markets. We pretty much do it every week. I'm not going to do it this week, but we've scanned the markets and we're just going to look for a stock. So that's our mechanical reason. In our production line process, number one, mechanical reason to look for a chart. Number two is visual confirmation. That's what we're focusing on. That's what this 6 of the best is. Visual confirmation. What's this chart doing? Is it going up? Is it going down? Is it going sideways? Is it a little bit of a hodgepodge? It's kind of the first half's going up, the second half's going sideways. Me personally, I would say it looks like Netflix, but it's not exactly the same. We've got this high here. It's not really, the highs and the lows, they're not really well defined. Can everyone see that the range, while it's obvious there's a range, it's not well defined, is it? Can everyone see that it's not as well defined as Netflix? Let me know that we're all on the same page. You can just like give me a little yes, yeah, we get it. Yep, perfect. It's clearly range bound. It's clearly going sideways. No one's disputing that. But I'm looking for definition. I want a very clear upper boundary. It's not that clear, at least not right now. Now I could still say, okay, well, there's the extreme high and the extreme low. In this case, what I would do, because it's not well defined like Netflix, I would probably just look for a breakout. I would wait for it to be above the range high. The range low, they're not really well defined. So why a breakout? Because the move into the consolidation was up. The prior trend was up. So I'm just going to wait for it to start trending again. That's what I would do here on Apple, because it's not a great example of a range. It's not well defined. Let's go back to Netflix. Netflix, really well defined. So what gives me definition? We've got at least 3 touches of the high, and we've got multiple touches of the low. Any fool can connect 2 points together. Anyone can do it. When we start getting 3, when we start getting 4, 5, 6, when we get multiple touches of boundary points, it becomes easier to go, yeah, this is really well defined. I can put a straight line ruler on all of those lows and all of those highs. That's great. Again, just coming back to Apple, quality control. Think about our production line. If we had a factory looking for trades, yeah, this kind of fits the mold, but quality control, it's not fantastic. So just something to be aware of. So the point I'm trying to get to is, if it's not obvious, it's not there. If it's not obvious, it's not there. So what I'm going to do with this is flick it in the reject pile. Don't be afraid. And this is one of the single hardest things for new traders to do. And that's to recognize that, hey, you know what? I can see it's going sideways, but it's not well defined. Go and look at something else. There's like 28,000 stocks in the US market. Go and look at something else. Don't worry about it. Go and look at something else. And that what we just did there is one of the hardest things to do, because it's natural for any trader to try and force a trade. I caught myself doing it yesterday in our little insider community for day trading. And for anyone who was in attendance, like you heard me do it. I was trying to force a trade. So right, I pulled the pin on the trade. Like I was jumping around the time frames. I just because I've been doing this 20 years doesn't mean that I'm not prey to looking for a trade. I want to trade that stock. Now that I'm looking at it, I'm looking for an opportunity. And I caught myself doing it. Like, I'm forcing the issue. So don't be afraid to step back and go, you know what? It's not perfect. It's not ideal. It doesn't fit into one of those 6 things that Phil was talking about. It's kind of going, and again, listen to the way that you describe the inner voice. It's kind of going sideways. Yeah, it looks like it's doing this. Maybe it's doing that. There's no conviction. But when you go to Netflix, again, come back to Netflix is a really good example. When you come back to Netflix, listen to the wording. It is in a range. It's a statement. There is no deviation. There is no hesitation. It doesn't matter whether you've been doing it 5 minutes or I've been doing it 20 years. You and I are both in agreement. It is in a range. Fact. That's not changing. That's what we're looking for. And this is what I refer to. It's that there's the trade experience. Oh, there's the trade right there. Oh, it's in a range. Great. I've got 4 things that I can do. I'm either going to trade reversal off the range low, reversal off the range high, the break of the range low, or the break of the range high. I'm looking for one of those things. Great. Which one? It's breaking out. There's the trade right there. Trade the next pullback. So for me personally, I'm just waiting for Netflix to go above the high, and I'll be in this on a bullish trade. Don't know if it's going to work out. Truly don't know if I'm going to make money on it. I'm not going to pretend to lie to you. I don't know what's going to happen next. What I do know is that for the swing trades, about 63% of the time, these trades work out, they make money. And if it works out, that's cool. We can look at targets. We've actually talked about targets 3 different ways on previous workshop if you want to go back on YouTube. But yeah, we're going to have low risk. If it goes back in the range, I'm going to be out. If it carries on going, then yeah, I'm going to take the height of the range and project it upwards. And I've got about a $100 target. So I'm going to risk $25 on the stock to make 100. I think that's a good exchange. And if it doesn't work out, $25. If it does work out, $100. That's great risk reward. I'll take that every day. If this sets up every day, I'm going to take it every day. Great opportunity. So listen to the way that you view these charts, these trades. Again, let's go back to NVIDIA in our little list. Again, it's very clear that price is in a range. Can everyone see that this is, again, it's not as well defined as Amazon, but it's a lot more defined than Apple. Yeah, easy to see. Mark off the boundary high, mark off the boundary low. I think it might be worth pointing out, particularly and I'm focusing more on consolidations. When it's trending, anyone can see that it's trending. It's going up. Average price is going up. Buy the dip. Anyone can do that. So I'm spending a lot more time on the consolidation part because this is normally where people get tripped up. Don't worry about the name of the pattern. Again, the last time I counted, I'm very familiar with 34 differently named consolidation patterns. Doesn't matter. Just recognize that it's in a range. We could call this a wedge. We could call it a flag. We could call it a triangle. We could draw a sloping. Don't worry about angled trend lines. Just mark off the boundary. There's the boundary. There's the low. There's the high. There's the low. Don't worry about what the name of it is. Don't worry about trying to label it because it can evolve. It can mutate. It can change. Don't worry about trend lines and don't worry about sloping trend lines because, again, until price makes a new low, until price makes a new high, it's in a range. So don't worry about trying to label the pattern from one of the textbook names. Again, I'm familiar with about 34. I stopped counting all the different named patterns. I know more. There's maybe a 50 or so differently named patterns. If you think about all the fractals, the Gartleys, the bats, the triangles, the wedges, the flags, the pennants, and all the other bullshit that goes along with it. It doesn't matter. Don't worry about the name. It's in a range. That's all we need to know. What am I looking for? Range reversal, range breakouts. That's it. 4 things. So now that we've got that, where's price in the range? Okay, it's a little bit sloppy. There's almost like a range inside the range. Can everyone see that? So you can have them overlapping. There's a very tight consolidation inside the bigger one. So if I wanted to, I could drop down to a 60-minute chart and trade this. That looks interesting. If I don't want to get involved on the lower time frames, just wait for the breakouts. Again, what are we looking for? Let's go back to Netflix, NFLX. Let's go back to Netflix. I'm looking for that, for a breakout. That's what we're looking for. When that happens on NVIDIA, put the trade on. That's it. That's what we're looking for. So where's price in relation to the range? It's in a range. It's in the middle of the range. Don't worry about it. We're waiting for it to be above the range, trade the breakout, below the range, trade the breakout. I think on this occasion, I wouldn't worry about a range reversal because we've got, again, a pattern within a pattern. So again, don't worry about it's in a range. Phil said to take the reversal. Again, we might not get it back to the extreme low. We might not get back to the extreme high. It might do something like Netflix did where it jumps, it gaps on some earnings. It's okay. Don't worry about it. I would be looking for the breakouts. If you want to enhance the flavor of the trade, look at the move into the consolidation. We've got a very clear consolidation. And about 60% of the time, it's going to break in the direction of the trend, meaning that if it goes higher, about 60% of the time, it usually follows the main trend, the dominant trends that moved into the consolidation. It does mean that 40% of the time it doesn't, which is why we wait for the breakout. We wait for the break, we wait for the pullback, and then we're going to trade the continuation. So I'm happy to trade it down. It's just that most of the time it's going to go in line with the trend. That's just my observations. That's what I've noticed over the years, but that's what we're looking for. And again, when we, just go back through the chart, this is PayPal. When we go back through the charts, we can start to say, okay, well, first part of the chart's going up. The middle part of the chart is in a range. Ooh, there it is. And now we've got, is it starting to trend again? So over to you folks. What do you think? What would you, now that you know one of those 6 things, we can break the chart down very quickly and say what this chart is doing. This is doing a few things. This is a little bit of a hodgepodge, a little bit of everything. Typical choices if you're not sure. Go and look at something else. But when you start to gain some experience, you can break the chart down like this. But now you know what the chart is doing. More importantly, what the chart is doing right now. If you could place a trade, if someone put a gun to your head on this and said, you've got to put a trade on PayPal today, what would you do? Yeah, what would you do? Would you be a buyer? Would you be bullish? Would you be a seller and sell short? Would you do something else? Yeah. You're more likely to, exactly, yeah, you're more likely to buy the next pullback. And to be fair, the pullback, the pullback's there. It's already developed. Arguably, you could say, you know what? I'd probably just go long. Go long, close your eyes, come back in a month. Yeah. This is on our, this is a stock that's on our watch list. We've been looking at this for a swing trade. We're actually, what we're trying to do in our day trade community, the over shoulder training, we're actually trying to scalp an entry. We're looking for day trade entries that will get us into the swing trade so we can really maximize the potential. So it's taken a few days to get going. So again, I'm looking for an entry on a 5-minute chart. It's not necessary to do that. But I am doing it because I've got the luxury of time to look at the charts for about the first 60 to 90 minutes of the day. And if I get that entry, then that's great. If you don't have the time or the luxury to do that, trade the next pullback, just trade the daily chart. You don't need to trade the lower time frames. I'm just like letting you know what I'm doing. This is on our watch list. You know, the bullish plan is something that I'm looking for. I'm looking to be bullish. If I can get a day trade entry on it, I'll day trade myself into a swing trade. If I can also have multiple day trades as a part of the swing trade, then that's going to be great. That's going to be a lovely little cherry on top of the trade. What's going to happen next? I'd love something like that to happen. Great. Probably going to be good. So buy the next pullback. Great. Everyone gets the idea. Let's take a look at Tesla. What's it doing? What's it doing? Is it going up? It almost looks like PayPal, doesn't it? Up, down, or sideways. So it's a little bit more progressed compared to PayPal. We've got that nice trend. Right now, what's it doing? Yeah, it's absolutely Duncan, spot on. It's pausing in an uptrend. If we'd looked at that on a 60-minute chart, that right there, that would be a nice consolidation. But if you were going to put a trade on this, do we do it today or do we wait for the break of the pullback high as it starts to progress? This is what I might refer to as a time-based retracement. We've not got a depth of retracement to buy the dip, but it is over a period of time moving sideways, so it's resting. And that seems to be a common thing with Tesla. Again, you can see the same thing. If we look here, draw your attention to July, August last year, it did something similar there. So can we start thinking about, okay, well, now that I know how to break the chart down, it's doing something similar right now. Would it be fair to presume that something similar to last time is going to happen again? Did that last time? Probably going to explode. So we'd be expecting something like that to happen next on Tesla. That could be good. maybe I can just take the break above $900. If it doesn't put in a deep retracement, that's going to be the trade. So it's pausing in an uptrend. Cool. So I don't need to worry about it today. From a timing point of view, I can just trade the next pullback. Is everyone happy with this? I think we've wrapped up the concept quite quickly. I got through it a little bit quicker, but it just hopefully just explains what I'm looking for. If we go to, maybe we just finish off on, this is the setup that I use for looking for day trade opportunities. So before the market opened, I did the usual scan for pre-market volume, pre-market gappers. So I've got 25 stocks here that are potentially great candidates for day trades. So that's what I'm looking for. So now that so mechanical reason to put 25 stocks. Okay, I'm not going to trade all of them. They're just on first step of my production line. Give me a dozen or so stocks that might be worth looking at today. Pre-market volumes, great. They're gapping, they're jumping from one level to the next. Great. That's our usual scan that we do on a Friday in these free workshops. Like, what are we going to trade? Great. Now, when I go to do step 2 of my production line, visual inspection, we've just spent the last hour talking about it. Visual inspection. I've got the daily chart here. I've got the 60-minute chart there. I've got the 5-minute chart there. Now, normally I do this before the market opens. So I'm looking at that pre-market data to see where it's gapping is what I'm looking for, because these are gapping stock scan. So when I'm looking at the chart again, just focusing my attention on the daily chart, where's it gapping to? Where's it gapping from? It's in a range. Can everyone see it's in a range? It's in a range. It's reversing off the range low. It's gapping higher. It could go to the range high. Now, if I want to find an intraday trade, maybe the intraday trade, the opportunity might not be there anymore. It was looking great before the market opens, but it's gapping high. There's maybe a little bit of wiggle room to go up to the range high. So I've got opportunity for it to move a little further. Now, if I'm looking for a swing trade, it's not today. It needs to be above the range high, below the range low. If we were looking at this yesterday or earlier in the week, you might be thinking, okay, it's reversing off the range low. But you've got that concept of, like, in the last month and a half, what's it doing? It's in a range. Now, we could take it a little bit further. Now we're looking at this chart. In the last 6 months, it has been in a range. It's starting to do, they're overlapping each other, but it's still in a range. Okay, so if it goes above $100, then maybe the next swing, the next upswing on AMD, Advanced Micro Devices, could be about to start. It's not going yet. If it gets back to $75, I could still be a buyer at $75 because technically that's still the range low. And what I'm starting to do is, now that I know one of the 6 things that I'm looking for, I can start saying, where's price now? Where would I like it to be to place a trade? What do I want to happen next? It's in a range. Great. Where do I need it to be to place a trade? Above the range, below the range, at the bottom of the range. And right now we're at the high of the range. I don't think there's an opportunity today. But now we've got structure to look at the chart and evaluate it. Is there an opportunity today? Well, it looks interesting, but not today. Guess what I'm going to do? I'm going to look at something else. Don't need to worry about it today. Similarly, CRM. It's having a little bit of activity. Just looking at the last month and a half. And again, now that we've got structure, we can say, okay, there's overlapping consolidation. So again, where's price in the consolidation in the last month? So in the last 2 months, in the last 2 months, it's in a range. Okay, it's jumping back and forth. Okay, from just trading this off the daily chart point of view, probably not giving me great opportunities. Intraday, there's not really seeing the setup just because I've been watching this. If it goes above 230, we could see a nice swing. It'll be moving back into that other consolidation. Okay, so we can trade it from the prior range low all the way up to the prior range high. Maybe it goes up to 270. Cool. If we can get a trade on in the smaller consolidation, 230 or 210, they're the zones that I'm looking at. Maybe we can trade it there. Possible, but now we've got structure, we've got context. In the last 2 months, we've got a range. Looking back further in the last, again, 6 months, we've got a little bit of a range there. So we can trade it from one range to the next as they're overlapping. That'd be okay. I'm okay with that. But now because we've got those 6 things that we're looking for, I can start to formulate a plan. What do I do next? Step number 3, how do I put the trade on? Do I need to worry about it today? No. Guess what I'm going to do? I'm going to look at something else. I'm trying to find a today trade. What am I going to trade today? So what we can do, the speed of thought, just to give you kind of the speed with which I'm looking at this. Again, I'm looking at the daily chart. I'm trying to figure out, using the structure that we've just been through, am I going to trade this today? Snap, no. JPM, no. What do we got? Alibaba, no. MU, rally in an uptrend, no. Uber, retracement in an uptrend. Well, this is looking interesting. So I'm just going to pause. Again, in the last 3 months, we've got a sloppy, messy trend, but can everyone see it's retracing in an uptrend? I don't think it's a today trade, but guess what I'm going to do? I'm going to put it on my watch list. This is closer to me having an opportunity. It's probably not going to be today, but from a swing trade point of view, meaning I'm going to take an entry off the daily chart, it's getting close. It's not no completely now. It's not no, it's just not today. This is a maybe trade. I'm going to put it on a watch list. I'm going to come back tomorrow. So this would be the first thing that I look at tomorrow. I appreciate tomorrow's the weekend, but you get what I'm saying. I'm going to come back tomorrow. Is it today? Tomorrow? And then on Tuesday, is it today? On Wednesday, is it today? I'll keep an eye on it. And then maybe it turns around. How do you know to enter, Phil? Well, you can look at all the other times that price turned around in the uptrend to help you figure out what it looks like. Again, it's a little bit beyond the discussion today, but you can go and look at what happened last time to help you figure out what to do this time. I don't think it's today. But guess what? I'm going to put it on a watch. I've already got it on a watch list, but I would put it on a watch list, come back tomorrow, go and look at something else. Can everyone see this? This is what we're doing. We're just basically very quickly, it takes longer to explain than to actually do. Tesla we've already looked at. Again, Tesla would be a maybe trade using the same description. JD looks interesting. We're already watching this. We've got an uptrend. Again, now we're looking at this. This is one of those. Can everyone see that it's contained in a boundary? This time we've got a range. It's pointing upwards. It's okay to have an angled range. That's okay. You could argue that it's trending. That would be okay as well. You can call it a trend if you want. If you don't see that, you can see that it is trending. But we've got that, well, where is it in the context of a trend? It's about to break to a new high. You can certainly buy the break to a new high. We can buy the retracements. It's not retracing in an uptrend. You can buy breaks to new highs. That's fine. And we can get away with it because price is rested. Just like Tesla. If you remember Tesla's rested. It's small consolidation, resting in an uptrend. And that's what JD is. You know, we can buy those breaks to new highs. Everyone happy with the logic? NEM, I would say, was a mess. It's sloppy. It's messy. It's definitely ranging. It's definitely consolidating. It's in the middle of that consolidation. It's not at the boundary highs. It's not above the boundary highs or the boundary lows. Guess what I'm going to do? I'm not going to worry about it. So this is what you'll find is a lot of what we do when we follow this process. Step 1, mechanical reason to look at a chart. Step number 2, what's the chart doing? Again, this is a retracement on MS Morgan Stanley. This is a retracement in an uptrend by the dip. This is another one that I'm watching right now, by the dip in an uptrend. It's dipping in an uptrend, retracing, downward movements in an uptrend. So we can look for buying opportunities. It's already on a watch list, or if it wasn't already, I would put it on a watch list. I think BUD, this is a little bit sloppy, a little bit messy. Guess what? Let's go and look for something that looks a lot better. GM, this is a rallying in an uptrend. I'm going to wait for a retracement in an uptrend. What does it look like? Go and look at the last time price rallied, the last time price retraced. So I want to see that. There's the rally part. So I want to see this happen again. So I want to see that happen again. So maybe what would find a great trading opportunity on a GM for me is if or when price puts in a deep retracement or enough time goes by for this move on average to catch up with price. Because that's what happened last time. I can start to formulate a plan. It's in an uptrend. Facts. Buy the dip. what does the dip look like to me? I'm putting definition on what I want to happen next. I'm not going to buy the rally. I want to buy the dip. Great. What does the dip look like? Well, look at the last time it dipped, the last time it retraced. Great. If that happens again, I'm going to fill my boots. Great. It's not no, it's not today. It's maybe not even tomorrow. This is maybe, I mean, look at how long it took to retrace. It retraced for about a month. So after a month, this is maybe a next month trade. Wait for a deep retracement, wait for enough time to go by, and then General Motors might be another great opportunity in middle of February. That's looking good to me. I think that's a great place to stop, folks. Does everyone get the concepts? Does everyone get the idea? All I'm looking for is one of our 6 things, 6 of the best. Buy the dip, sell the rally, buy the break of range lows, the break of range highs, or take reversals off range lows or range highs. 6 of the best. To help with that, the market's either going up, down, or sideways, and that's all we're really doing. Which way is the chart going? But the magic of hopefully the magic of what you saw, it's not just recognizing what the trend is. When you define the time horizon, you can start to break the chart down. Okay, it's trending there, it's ranging there, and it's almost like building blocks. When you've got that time horizon in the last 3 months, in the last 6 months, and you saw in the last few charts, we actually did in the last 3, 6, in the last 9, we did it several times on some essentially messy charts. You can break it down and think of them like building blocks, and you can trade one range to the next, which is what we saw on one of the other charts. But you've got that structure to evaluate a chart very quickly in a very simple approach. And if it's new for you, this concept is new, just look for 6 months. Just give yourself one time horizon. And in the last 6 months, what's the trend? And it needs to be doing one thing in 6 months. And again, until you get used to breaking the chart down, just make it easy for yourself. There's so much choice, so much abundance to say, okay, in the last 6 months, this chart is trending. Great, buy the dip. That's all you need to do. And don't worry about breaking it down and multiple time frame analysis. Just give yourself in the last time period and make it like a good chunk of time. In the last 6 months, this is the trend. It's a fact. It's a statement. It's not going to change. There's no interpretation. And only look for the ones that are obvious. There is the trade. If you just do that, you'll be doing very well. That's me done, folks. I think it was a good session. Hopefully you enjoyed it too. It's a nice, easy concept. Again, appreciate for some of you, it might be new. I see a comment there, Craig. I'll get to you in a moment. But it is a simple concept. It is a simple concept. Don't overthink it. If you don't see it, it's not there. Make it easy for yourself. There is the trade. We want statements of facts, not questions of possibility. So a good reminder, it's nice and simplistic. It's easy to do. And if you do need a little bit of extra help with your trading, my current focus is on short-term opportunities. I have a program called Profits of the Open. Usually will be done in the first 60 or 90 minutes. Right now, I'm going to be checking for my first round of trades, typically at 10 a.m. right now. I'm going to look for charts, look for trades. If they're there, the trade goes on. If they're not there, I'm going to come back tomorrow or Monday in this case. You see me post a lot of these trades in our Slack group. I post them out on the email. We're doing live trades 3 times a week and review sessions 2 times a week because I want to teach you how to trade, not get you to follow along. So that's what we're doing with this program. If you want some help with that, if you want some extra tuition, if I offer to help you find these short-term opportunities, you want to learn in the fastest, smartest possible way. We're going to focus on the best stocks, the best times. It's one simple pattern. There's actually 9 variations, and it's basic, most basic. It's one pattern. I'm looking for one entry pattern. Step number 3 in our production line process. You can learn this over the next few days. It is quite literally simple. Everything that I want to do needs to break down into step 1, do this, step 2, do that, step 3, do this. Last week, we saw a practical example of that. I'm just getting over quite a bout of serious illness. And I want it for myself first and foremost. It's not just, oh, it's a great teaching thing. Like when I'm not well, because I've got Crohn's disease, there's lots of times where I'm not well. but I want that for myself first. Step 1, do this. Step 2, do that. Step 3, do this. And then step 4, I'm going to go back to bed, because the trade's on. I don't need to do anything. And that's what I was doing for the last sort of 7 to 10 days. Trades go on and then go and do something else. I'm not looking at every chart every day, all of the time. That's what my big promise to you. You'll never be looking at every chart every day. We just want to zero in on what the best charts are to trade today. If there's a trade to place, we'll place them. If there's not, we're going to come back tomorrow, because what we don't want to do is just sit there idly trying to force the trade and make mistakes and make errors. That's what we do. So if you need some help with mastering trading and you need some extra tuition, again, I'm open to it. You can get a lot from the free training. If you just want to know the kind of the nuts and bolts of it, I give you the nuts and bolts. You can go and have a look at antivestor.com/VWAP, or you can go to the homepage and just choose the middle choice, the VWAP profit strategy in the middle. I need help with the day trading strategy. You can go and do that there if you want. And essentially what it will teach you, again, the overview video should give you enough. If you're a more experienced trader, you just need to know the what, the why, and the where to do it. You'll get enough from that. And for most people, that's enough. But again, if you need extra help and you want me to help you with it, let me know. I don't know if what I do is right for you. I truly don't know. Follow the same link, antivestor.com/VWAP. Again, or you can go to the homepage, go and watch the instruction video. It'll give you a good idea of the strat that we use every single day. And if you want some more help with it, there's an application process. I don't accept everyone into the program. It's not for everyone. And that application process is to help you and help me figure that out together before we actually speak. So if you want some help with that, take the next step. Go to the homepage, go and have a look at the information video and see if it makes sense for you. And if it does, we can talk more. And if not, let me know and I'll point you off in the right direction. So with that said, that was 6 of the best. Thank you very much for your time. Thank you very much for your attention. It doesn't go unnoticed that you all decided to spend some time with me this week. It really is appreciated. But until next week, have a great weekend. And I will see you at the same time, the same place next Friday.